Welcome to the Commercial Real Estate Show, your source for market intelligence, forecast, and strategies. Hello, I'm Michael Bull. Thanks for being with us on one of the 47 radio stations. Maybe you're listening on iTunes or you're watching us on YouTube. We appreciate you being with us. And also, you're invited. We'd love to hear from you. You're invited to connect with us on Facebook, LinkedIn, and Twitter. Just search for Commercial Real Estate Show, or you can find all the links at our show website, creshow.com. Well, today we're going to talk about retail and retail real estate. We're going to talk about retail property sales and cap rates, where we are, what we expect to see moving forward. We'll also talk about REIT performance and retail REIT performance, where we are there, and what do we expect moving forward for performance. Then also we'll look at retail performance, how are the retailers actually doing, and include some strategies to help them perform better. And please welcome my first guest, Kevin Imboden. He's Director of Research with Real Capital Analytics. He's joining us on the phone. Kevin, thanks for being with us.
Always, Michael. Glad to be here.
Well, great, Kevin. It seems like we're seeing an increase in sales here in the Southeast where we work, selling shopping centers and single-tenant net lease properties. What happened in 2015? Where did volume end up?
Well, as a whole, we're looking at the best retail investment year of all time.
Wow.
And I think that might surprise people because everyone thinks that 2007 was the peak. But we're looking at close to $82 billion of retail investment transacted in the U.S., and that's up from 76 in 2014. Now, year on year in terms of the fourth quarter, it was a bit down, but what propelled 2015 ahead was the consistent amount of investment throughout the year, whereas in 2014 there was just a big fourth quarter.
Right. So what's this doing to cap rates? Are we seeing some compression there? What do you see?
Certainly, and I think I've probably sounded like a broken record the last couple times I've been on with the way cap rates have compressed, but there's just been that consistent slow compression across the spectrum. So for malls and other inner city type properties, barely over 6% nationwide, and strip centers are down to around a 7.2. So as a frame of reference, coming out of the recession, say 2010, we were up to over 8 in terms of strips and close to 8 in terms of malls. So that's pretty big compression over the 5-year span, but it's been pretty gradual as it's happened little by little each year.
And when you refer to strips, you're also including grocery-anchored shopping centers, right?
That's correct. That does include the grocery-anchored centers. Certainly those trade at a bit more of a premium than your average strip center. So you're probably looking at another 300, 500 basis points lower on those.
Okay. And you do a great job, and you guys do at RC Analytics of tracking investment sales and cap rates and also, what might impact them. So, we have some things going on. Let's talk about them and get your ideas on how that might impact values and cap rates moving forward. First of all, we're all expecting interest rates to continue to climb. I guess we really hope so, right? We hope the economy stays strong for everyone, especially commercial real estate. So how will rising interest rates impact values?
So they may have that impact in terms of financing, certainly. If financing becomes more dear, then that will be a problem if people want to buy. I think we still have that gap in terms of cap rates and interest rates where there's that space where people can price that in and still get a good return. I think also, in terms of loan to value, we're still looking at high 60s for the most part across the board. So there's still some space there as well. We're not up to the crazy 80% level that we saw right before the recession. So as far as that's concerned, I think if I had to guess, it's always fraught with danger, I suppose, I think we still have a bit of room there.
Well, I've went back and listened to some of these shows from many years back just to kind of see how you guys there are doing and other analysts that we have on, and it's been amazingly accurate. So give yourself some credit. I know you study this every day, and you're being modest, but I've really seen some success here with your forecast. And another thing that's recently happened that, as we were talking about earlier, it hasn't really seemed to be in the news enough, and that's the FERPTA changes, which will really might open up the the floodgates more for foreign investors to invest in U.S. real estate. And that just happened, I guess, in December, right? Have you guys seen anything yet, and what do you expect there?
Well, I think it's a little too early to see anything yet just because we're only a couple weeks into this. But we were looking at the, I guess basically for the entire year of 2015, 16% of all investment in the U.S. was coming from foreign investors. And anecdotally, and we have a hard time to prove this, but it's something that we've long argued about internally, we figured that there's a lot of investors who would like to invest even more in the U.S., but they had to write that tax into what their expected return was. And these are the kind of large investors that have billions to invest. They are probably not going to be affected by the need for financing because these could be pension funds, these could be investment managers who would essentially be paying all cash for these properties. And they have a lot of interest in being here because emerging markets are not doing as well as they used to be. So this will give them another opportunity, another reason to bring more money to the U.S. So if some investors who do require financing are a little hesitant right now because of the increase in interest rates, well, these other investors can take their place.
Right. So do you think that may increase buyer demand and then maybe keep cap rates from being as impacted from rising interest rates because you have that increased buyer demand?
I think the potential is there. It's just remains to be seen which side ends up winning in this. So it's going to be a pretty good blockbuster throughout 2016. So we got to get out the popcorn and watch.
That's great. And we're talking to Kevin Imboden with RC Analytics about the retail investment market. So are there any change in what would be the hot markets for investment in the U.S.?
Well, it's interesting you mentioned that because as we were compiling our totals for this year, we're going to have our annual reports coming out pretty soon for each property type. There were a few markets that really surprised me. I found that some of these markets in the Southwest that have been relatively quiet for the past few years have suddenly jumped up. Phoenix and Dallas both are up $500 million from last year to this year. And if that sounds impressive, well, Las Vegas, which no one wanted to touch for quite some time now, has doubled in volume.
Wow.
So we went from $700 million in total retail investment last year to over 1.4 actually for 2015. So some of these investors who have up till this point been staying in the primary markets, wanting to take the safe route still, now it's going into some of these secondary markets and maybe even some of these tertiary markets because we've seen some interesting sales there.
And are they going there searching for higher yields, or are the cap rates somewhat similar?
Well, I think it's certainly yield chasing a bit because we've seen some compression in those markets now. Those yields were much higher in the past where we were looking at those high sixes, high sevens. And we still actually see some of those that are untouched in certain markets. So coming from, I guess, a low total number of centers transacted, there are certain markets for strip centers that are still in the low eights as far as cap rates. We're talking Salt Lake City, Memphis, and there are several markets that are still returning high sevens. So we're talking Orlando, Charlotte, Minneapolis, some of these larger secondary markets that probably haven't received too much investor interest yet, but probably will soon as investors are looking for those markets that still will give them a good return.
And when you compare those cap rates in some of those cities to some of the other sectors you guys track, like industrial and office, are you seeing that these retail investors are generally getting a higher cap rate, a better return?
Certainly, because I think in certain primary markets, the office and apartment caps have compressed to such a huge extent that you have to think long and hard about investing there. If you have, I guess, more of a short-term return goal, then we're looking at 2%, 3% difference between some of these primary and secondary markets now, regardless of property type. And so it's opening some eyes a little bit. People are looking for different solutions.
And because of these higher returns in retail over office and industrial, how is the volume comparing? Are we getting more retail buyers in the marketplace than these other sectors?
I think some of the primary markets are still being targeted much more highly. So there will still be those folks who want to aim for the best of the best, and they're going to still go to the primary markets and still go to those high-end office sector. But there remains to be seen all that capital that we know is sitting out there that hasn't invested as of yet, but is very much interested. And I think we've seen some of these buyers, when they've started to come back in the market, they're going retail or industrial instead of going straight for the high end, just because they know they can chase those larger returns.
Yeah, well, that makes sense. Well, Kevin, thanks for joining us today. We appreciate you being on.
Absolutely. Thanks as always, Michael.
All right. Well, thank you. If you'd like more information from RC Analytics, visit rcanalytics.com and stay with us. We'll have more. We'll have some retailer tips and more for you. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back.